What if I told you there's a product that's made more money than oil, more than gold, more than any technology ever invented, and you're probably paying for it right now without even realizing it? This product doesn't need to be manufactured. It doesn't need warehouses or shipping trucks. It creates wealth out of thin air. And the people who mastered it centuries ago built empires that still control the world today. That product is debt. If you want to understand how money really works and why some people get richer while others stay trapped, then hit that subscribe button right now. Because on this channel, Monetary Archaeologist, we dig up the financial secrets that the system doesn't want you to understand. Let's go. The invisible chain. Think about your life for a second. Your house? Probably financed with a mortgage. Your car? Most likely a loan. That college degree? Student debt. Even that coffee you bought this morning might have gone on a credit card you're still paying off. Debt is everywhere. It's so common that we don't even question it anymore. But here's what nobody tells you. Debt isn't just some neutral tool that helps you buy things. It's been carefully engineered over thousands of years to become the most profitable product in human history. And I'm going to show you exactly how they did it. See, when you borrow money, you're not just getting cash today and promising to pay it back tomorrow. There's something else buried in that agreement, something that transforms your future into someone else's profit. Interest. That's where the magic happens. Or, depending on which side of the transaction you're on, that's where the trap snaps shut. Ancient origins. Let's travel back in time, way back. We're talking about ancient Mesopotamia over 4,000 years ago. Clay tablets have been discovered with debt records carved into them. People borrowed grain, livestock, silver. They recorded who owed what. But here's the fascinating part that gets left out of most history books. These ancient civilizations understood something we've forgotten. They knew that debt was dangerous. They saw what happened when too many people owed too much. The society would start falling apart. People would become slaves to their creditors. Farmers would lose their land. Chaos would spread. So what did they do? They hit the reset button. Kings would periodically declare debt jubilees. All debts erased, forgiven, gone. Society would get a fresh start. The system could breathe again. The ancient Hebrews had a similar concept. Every 50 years, the year of Jubilee. All debts forgiven. All slaves freed. The land returned to its original owners. Why? Because they understood that unchecked debt doesn't just hurt individuals. It destroys entire civilizations. But somewhere along the way, the people in power figured something out. Something that changed everything. What if, instead of erasing debt, we weaponized it? The medieval moneymakers. Jump forward to medieval Europe. The Catholic Church runs the show, and they've got a rule. Usury is a sin. Charging excessive interest on loans? That'll get you condemned. It's considered exploitation, immoral, against God's law. But human greed is creative. Merchants and early bankers found loopholes. They disguised loans as business partnerships. They created complicated contracts that looked like trade agreements but were really just loans with hidden interest. They bent the rules until they broke. And then came the banking families. The Medici family in Florence, Italy, didn't conquer cities with armies. They didn't inherit massive kingdoms. They lent money. They financed popes, kings, merchants, and entire governments. And in return, they didn't just get interest payments. They got power, political influence, the ability to make or break nations. This is when debt stopped being just about money. It became about control. The Medicis understood something crucial. When someone owes you money, especially a lot of money, they become dependent on you. You don't need to invade their country. You don't need to threaten them. You just need to be the person they owe. That's real power. The birth of government debt. But the real game changer came in the 1600s. The Dutch Republic is fighting for independence from Spain. Wars are expensive, really expensive. Traditional funding methods meant you could only fight as long as your treasury had gold and silver. Run out of money, the war's over. But the Dutch had a revolutionary idea. What if we borrow from our own citizens? They created government bonds. Basically, you give the government money now, and they promise to pay you back with interest later. And here's the brilliant part. You can sell that bond to someone else. It becomes property. It has value. Suddenly, war wasn't limited by how much gold was sitting in the vault.
You could fight indefinitely by selling the future, by promising to pay interest year after year, decade after decade. The Dutch perfected this system, and it worked so well that England copied it immediately. In 1694, the Bank of England was created. This wasn't just another bank. This was the formalization of permanent government debt. The government would borrow from a central bank, which would issue paper notes backed by those loans. For the first time in history, a nation's debt wasn't meant to be repaid. It was meant to be permanent, rolled over, refinanced, eternal. And the bankers who managed this debt, they became more powerful than most kings. The perfect business model. Think about the genius of this for a second. If you're lending to a government, you've got the safest investment in the world. Why? Because governments can raise taxes. They can force their citizens to work, to pay, to keep the money flowing. A government won't disappear overnight. It won't go bankrupt easily. And if it gets into trouble, it just borrows more. For the lenders, this is a dream. Steady income, low risk. And every war, every conflict, every expansion just means more borrowing, more interest, more profit. The cycle became self-perpetuating. Nations fought wars. Wars required money. Money came from loans. Loans enriched the creditors, and those creditors financed the next war. By the 1700s and 1800s, the bond markets in London, Paris, and Amsterdam were the real centers of global power. Armies marched and empires expanded, all funded by debt. But it wasn't just governments anymore. Debt goes mainstream. As the Industrial Revolution exploded across the world, debt spread into every corner of society. Railroads, built on credit. Factories, financed through bonds and bank loans. Infrastructure projects, all borrowed money. Companies borrowed to expand. Workers earned wages from businesses funded by debt. And then those same workers started borrowing too, for homes, for tools, for basic goods. Debt seeped into the bloodstream of modern capitalism. By the 20th century, something remarkable happened. Debt wasn't just for the rich or the powerful anymore. It became a product sold to ordinary people, to you, to me, to everyone. Mortgages became the gateway to the American dream. Own a home, build wealth. Except that home loan means you'll pay double or triple the actual price over 30 years. The bank makes more off your house than you do. Car loans, credit cards, student debt. The entire modern financial system was rebuilt around one simple idea: get everyone borrowing. And here's the hidden brilliance, or the hidden cruelty depending on how you look at it. Debt doesn't just make money once. Every month you make a payment. Interest flows from you to the creditor, month after month, year after year, sometimes decade after decade. It's a subscription model, but you can't cancel. The trap tightens. By the mid-20th century, debt had become the lifeblood of the entire global economy. After World War II, the Bretton Woods agreements created the International Monetary Fund and the World Bank. The stated goal? Help nations recover and develop. The actual function? Lend money with strings attached. Countries could borrow, but only if they followed specific rules. Cut government spending, privatize industries, restructure your economy the way we tell you to. This was called structural adjustment, but what it really meant was control. Debt became a tool of political domination. Nations that borrowed found themselves unable to make independent decisions. Their policies were written in Washington and European capitals, not in their own governments. At the same time, banks discovered the ultimate market: everyday households. The mortgage became the cornerstone of middle-class life. Suddenly, millions of families could own homes. But they didn't really own them, did they? The bank owned them for the next 30 years. The family just made payments. Then came credit cards in the 1950s and 60s. Buy now, pay later. Enjoy life today. Don't worry about tomorrow. For banks, this was a gold mine. Millions of people making interest payments every single month. Steady, predictable, compounding profits. For governments, it fueled economic growth. Consumer spending could expand, even when wages didn't, because people were buying on credit. For corporations, it guaranteed customers. People could be convinced to buy things they couldn't afford because debt made it possible. Debt became the engine that powered modern capitalism. The addiction. But here's the problem with this system. It's addictive. Banks don't want you to pay off your debt quickly. They want you to carry a balance, refinance, roll it over. The longer you stay in debt, the more money they make. Governments don't want to cut spending or raise taxes. Borrowing is easier. Promise benefits today, push the cost onto future generations.
And central banks? They make sure there's always enough money in the system to keep it all going. By the 1970s and 80s, the cracks started showing. Developing countries across Latin America, Africa, and Asia had borrowed heavily. Western banks were eager to lend, recycling profits from oil price increases. Everyone was making money. Then, interest rates shot up in the early 1980s. Suddenly, these countries couldn't make their payments. Mexico announced in 1982 that it was broke. It couldn't pay. The solution? Lend them more money, but with harsher terms. Managed by the IMF and World Bank. Debt became a trap. You borrow to survive. Then you borrow to repay the first loan. Each cycle, you lose more control. Your economy gets restructured to benefit creditors, not citizens. Ordinary people suffer through austerity, inflation, unemployment. But the creditors, they still collect their interest. Financialization. Meanwhile, something even more insidious was happening in the developed world. Wall Street discovered they could package debt and sell it. Mortgages, car loans, corporate bonds. They bundled thousands of these together and turned them into securities. Financial products that could be bought and sold globally. Debt wasn't just a contract anymore. It was a commodity, a raw material. Something to be sliced, diced, repackaged, and traded. This is called financialization. The financial industry stopped being about funding productive business and became about engineering debt instruments. Banks could create a loan, immediately sell it to investors, collect fees, and move on to the next one. Risk was supposedly spread around the system. In reality, it was just hidden, buried, waiting to explode. The inevitable collapse. And explode it did. 2008, the financial crisis. Trillions of dollars in mortgage-backed securities collapsed. The entire global financial system nearly came apart. Why? Because the debt had been stretched beyond any connection to reality. Millions of families lost their homes. Jobs disappeared. Savings evaporated. And what happened to the banks? The ones who created and sold all this toxic debt? They got bailed out. Government stepped in with taxpayer money and rescued the very institutions that caused the crisis. The message was clear. The system protects the creditors, not the debtors. And here's the truly insane part. After the crisis, did debt decrease? Did we learn our lesson?
No, debt exploded even more. Central banks dropped interest rates to zero. They printed trillions of dollars. They flooded the system with cheap money. And everyone, governments, corporations, households, borrowed even more. The present day. Today, global debt is over $300 trillion. Let that sink in. 300 trillion. That's more than 3 times the entire world's annual economic output. Never in human history has humanity owed this much. And we call this growth? We call this prosperity? Politicians brag about rising GDP, while quietly knowing that much of it is just borrowed from the future. A college student takes on $80,000 in student loans, and we tell them it's an investment in their future. A couple signs a mortgage that will cost them twice what the house is worth, and we call it the American dream. Governments run trillion-dollar deficits every year, and most people don't even notice because the consequences are invisible right now. Inflation slowly erodes the value of money in your pocket while preserving the power of the debt system. What looks like prosperity is often leverage stacked on leverage, a house of cards built on promises. So, who profits from all this? Banks earn interest on every loan, but they also created entire industries around servicing debt, refinancing, debt collection, restructuring. Every step generates fees. Investors trade bonds, betting on whether countries or companies will pay up or default. Hedge funds buy distressed debt from bankrupt nations and squeeze them for pennies on the dollar, still making fortunes. Credit rating agencies decide who can borrow cheaply and who has to pay premium rates. They're supposed to be neutral, but they're paid by the same institutions they're rating. Debt isn't just a financial product. It's a marketplace, an ecosystem, an entire economy built on promises. The transfer of wealth. And here's the most important thing to understand. Debt transfers wealth upward. Every interest payment is money flowing from the debtor to the creditor, from the many to the few, from ordinary families to massive banks and investment funds. Over time, this concentrates wealth. If you have assets, you can borrow cheaply to buy more assets. Your wealth compounds. If you don't have assets, you borrow expensively just to survive. You stay trapped. Debt becomes a mirror of inequality. It legitimizes and reinforces class divisions. The rich get richer because they use debt as leverage. The poor get poorer because they're crushed by it. The digital future. And now we're on the edge of the next evolution. Central bank digital currencies, CBDCs. Imagine money that's completely digital, programmable, traceable, controllable at the code level, loans approved or denied by algorithms, interest rates adjusted in real time, payments automatically deducted, penalties enforced instantly. Sounds efficient, right? But if history teaches us anything, it's that efficiency for the creditor means less freedom for the debtor. The most profitable product in history is being upgraded for the digital age. And once again, it's being designed behind closed doors, in central banks and financial committees, far from public scrutiny. The lesson. So what's the lesson here? Debt is not neutral. It's not a natural feature of modern life. It's not a helpful tool that just makes things easier. Debt has been deliberately cultivated, refined, and engineered over thousands of years to become the most profitable product ever created. It turns time itself into money. It transforms your future labor into someone else's present wealth. Every loan offer you receive, every credit card application, every easy monthly payment plan, there's a machine behind it designed to profit from your future. The system doesn't want you debt-free. It wants you dependent, borrowing, paying interest, forever. Understanding this is the first step to breaking free. Closing. From the clay tablets of ancient Mesopotamia to the mortgage you might be paying right now, from Dutch bond markets to Wall Street's derivatives, the pattern is always the same. Debt enriches the creditor, it burdens the debtor, and it reshapes society in favor of those who control the flow of money. The cruelest trick is that we've been taught to celebrate it, to call borrowing progress, to mistake debt for prosperity. Real financial freedom means minimizing your dependence on this system. It means questioning the promises of easy credit. It means understanding that behind every friendly loan offer is a mechanism designed to extract wealth from your future. History doesn't repeat, but the patterns are always there. And if you know where to look, you can see them. That's what we do here on Monetary Archaeologist. We dig up the financial truths that have been buried. We uncover the patterns that the system doesn't want you to see. If this opened your eyes, hit that like button, subscribe, and turn on notifications because we're just getting started. There's so much more to uncover. The answers are in history. I'll show you where to look. I'll see you in the next dig.